All right, greetings, ladies and gentlemen. We are back again. I know it's been a couple of weeks since my last recording. I've been quite busy, so I've not been able to work on a few recordings lately. But I've been able to squeeze some time today. And as I promised in my previous videos, I will be going into details about some of the trading strategies that exist for binary options trading. So in this particular video, I'm going to be giving you an idea of how the various trading strategies in binary options trading are and can be set up so that you can set it up on your own and then do your own testing and tweak it anyhow you want to make it perfect for you. For those of you that have not been following my videos and they don't know me yet, I think it will be fair to do a little introduction of my own self before I go forward. My name is Fidel, and I have been trading binary options since March 2014. And during my period of trading, I have got some experience. I've lost some money along the line, but it was chocolate blessing in disguise. you know, I lost a lot of money though, but I ended up improving upon my trading skills. And now I'm at a point where I have developed a particular trading strategy that at least I can guarantee myself of making profits on a daily basis. And it's a holy grail of the strategy, meaning that you lose it from time to time, but I always win more than I do lose. My image is right there on the left hand side of the screen. That's me. That's who I am. All right. So I think there's a little overview of who I am, and I think let's just trade into business. All right. Great. So today we are going to be talking about the various strategies that exist for financial trading. There are millions and thousands of them out there. Like I said, when comparing binary options trading with forex trading, they both use similar strategies. They use the same strategies, but it's just that you have to tweak the forex strategy to see the binary option strategy because they all have different expiry rules for a trade. So you have to tweak it to see the kind of trading you're doing this forex or binary options trading. But they often use the same strategy as I always do say. Now, in this particular video course, for the sake of this particular video course, I'm going to be talking about just six all the trading strategies and just teaching you six of them. You can use any of them. You can practice any of them. You can tweak any of them. You can improve upon any of them, and you can be making great profits with them. So the strategies are the breakout strategy, the moving average crossover strategy, the William percentage range strategy, which is usually referred to as the William percentage R strategy, and usually the overbought and oversold strategy. So that indicator tells whether an asset has been overbought or oversold, right? And they have the bouncing off strategy, which is usually also referred to as trend line strategy, or I think that's called the channel strategy. And we have a support and resistance strategy, and we have the candlestick pattern strategy. Which is the strategy I use, the main strategy that I use. It's quite good, it's very good, it helps a lot, but I hardly get able to stand that one. But it is a very good strategy, right? So these are basically, this is basically the strategies that we're going to be discussing. I'm going to go into details teaching, all right? So let's get ready, and then I hope you learn a lot from this video. All right, so for now, we're going to be talking about the breakout strategy. All right, a minute. Let me get my chat up, and then let's get into business. So a minute. All right, great. We are back. We're back. All right. Sorry about that. I just had to set up my chat. Okay, as you can see, I'm using the MetaTrader 4 chat, and that's what I use for my trading strategy, my technical analysis. That's what I use in my technical analysis. Now, as you can see on your screen, we have the Euro USD chart. This is for, I think, this is 18th May 2015. This is 18th May 2015 chart. And there's a 5-minute chart for that, for the Euro USD. and I'm going to be discussing the breakout strategy. Now, with a breakout strategy, it is a strategy that best works when a market is ranging. What we mean by the market is ranging is that the market is moving in between a particular price band. For instance, from what you're seeing on the screen, we have the market, the upper, which is the resistance level, being 1.13690. That is the resistance level. Okay, the resistance price. And then we have the I'm sorry about that a minute. Sorry about that. Yeah, excuse me. Okay, so we have the support level being 1.13309. So now if you notice very well, you will notice that if you watch from this point, this point all the way to this point in particular, you realize that the market was ranging between these two support and resistance line. Now this is the resistance line and this is the support line. The market was ranging between this period from this candlestick all the way to this candlestick. Let me use this so you get it. Now from this period, the market range from this point, the market range up to this point. It ranged in between up to this point, right? It ranged in between this price band, this band which is the resistance price, and then this band which is the support price. That's where the market was ranging. Now the market ranged between these prices, all right, until there was a breakout. Now the breakout occurred here. As you can see, the breakout occurred here, all right. I'm going to show you something after this. Like I see the breakout occurred here. So the market range, as you can see, ranged from this point to this point, but there was a breakout here, all right. Now this is where you apply the breakout strategy. So like I did say initially, there has to be, what do I call it, a range of the market. The market has to be ranging. Then a breakout occurs. So all you do in this case is you look for the highest price, the highest point, so the highest price. That will be your resistance. You look for the lowest price, that will be your support. Then you draw your line. Now this is how you draw a line. So let me take it off. So guys, you get to see how it's better. So you get your line, you click on this, then you bring it down. So you see, you get your highest point, all right, and then you take this, and then you get your lowest point, all right. So the market is ranging between this point, and then you put that number. So for instance, let's say you were here, right, and then you assume, okay, you just waited and you saw that. So you let the market move, the market moves, the market moves. It keeps moving. Now what do you see? You realize that when it got here, there was a breakout. So once the breakout occurs, it means it's going to go down because it broke through the support. You break through the support, it means it's going to go down. If you break through the resistance, it means it's going to go up. So if it breaks through the resistance, you make a call. If it breaks through the support, you make a put. So this means it's going to go down. All right. So from what you can see, right, the once there was a breakout through the support, what happened was the market went down throughout for the next. Now, can you see it? It went out. The breakout occurred at this point, and then the market moved way down below this price level of 1.13309 for almost an hour. For almost an hour flat, I think 2 hours flat. So now what happens is if you enter the trade here, once the breakout occurs, if you enter the trade somewhere here, as in your entry point is somewhere here, and you hold the trade for the next 15 minutes, 20 minutes, 30 minutes, 1 hour, I think 2 hours, I think it is 1 billion, 2 hours, 5 hours. You would win a trade. You get what I'm trying to say? So that's what it's gonna be. If you enter somewhere here, once the breakout occurs, you will enter it. If you enter immediately, you would win. But if you waited for it to close, that means that if you waited for it to close and you took the trade here, your entry point could affect it. Even with this, you could win at some point, but your entry point will affect it. You understand? But as you can see, the market moves above the closing price. Yeah, yeah, can you tell? That's how you move above the closing price here. So you will lose, you are likely to lose the trade, assuming you hold it to this point. So what I do advise about the breakout strategy is that what you do is that once the ranging occurs or is occurring, as you can see from here to this point, all you have to do is wait for the price to break through the support or the resistance. Once it breaks through the resistance, up, immediately it breaks through the resistance, you take your trade. That the market is gonna go up. If it breaks through the support, you take your trade, the market is gonna go down. Don't wait for the breakout. And this is a breakout candlestick. This is a breakout candlestick. Don't wait for a breakout candlestick to close. This is a closing price. Don't wait for it to close before you take a trade. Once it breaks out, you take your trade. Alright? Once it breaks out, you take a trade. So that is how it works. So you realize that if you take a trade, once it breaks out, assuming you didn't take a trade, the moment it broke out, let's say somewhere here, that's about around 1.13301, you're gonna win the trade. If you should even hold it for 5 minutes, if you should hold it, because it's gonna be the next 5 minutes kind of thing. So you're gonna be the next 5 minutes, 10 minutes, 20 minutes, 30 minutes, 40 minutes, 50 minutes, 60 minutes. In that case, this is I think it's 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55, 60. Even the next 1 hour, you're actually going to win this trade if you choose for the next 1 hour. You get it? Because you're going to enter around this price and you're going to win your trade. So that's how it works. So this is how the breakout strategy works. Point to note is that first of all, the market must range between the highest and lowest point. The highest point being the resistance, the lowest point being the support. And then you wait for the market to break through or break out from the range. And once the market breaks out from the range, enter a trade immediately. The breakout occurs. Once you enter your trade immediately, the breakout occurs, you can hold it for a number of minutes or hours, and then you can tell. I must be frank, I haven't really done a test to tell which time frame works best for the strategy. But you can do your test, and then you can determine which time frame works best for the strategy, as in how long to hold the trade when the breakout occurs. I'm just giving you an idea of how to set it up, and like I said, give your own back testing, your own tweaking, and everything to find out how long to hold it, which strategy will work best for it. Alright, I mean, which time frame will work best for it. But this is how you set it up, and then you can let me know if you have any difficulties in the comment section below, and then I will attend to you. Alright, so this is how you go about the trading strategy. The breakout trading strategy. This is how you build it, and then you could produce some more. Well, you wouldn't be winning all the time, but you could be winning more often. All you need to do is do a back test to get which time frame works best. Should I hold it for 1 hour? Should I hold it for 30 minutes? Should I hold it for 5 minutes? Should I hold it for 20 minutes? The next 5 hours? I mean, you have to do that test. I need you to do that test yourself, and then determine which time frame is best to hold it. Now, at least I'm giving you a fair idea of how you can set it up, and then you can make it work for you. Alright? First of all, like I said, make sure the market is ranging, look for the highest and the lowest price. Now once you get that, that's your support and that's your resistance. Now once the candlestick closes, breaks through the support for the resistance, depending on the direction, if it breaks through the resistance, it's a call. If it breaks through the support, it is a put. Alright? Then you take the trade, and then if you do the back test, you get to know how long to the trade, whether 5 minutes, 5 hours, 30 seconds, 30 minutes, all this kind of stuff. You will know that. Alright? So this is a breakout strategy. I'll be discussing the next strategy in the next video. So make it